Hello, this is Robert Miner with Dynamic Traders Group with their DT trade strategies for the week of October 11th, 2021. About a 10-minute video that we do for our Twitter and YouTube followers. They give you a little taste of what we do for our DT Report subscribers, where we update all the major financial markets and a few more, including Bitcoin and Ethereum, every day in our DT Reports with plus videos, trade tutorials, etc. So if you like what you learn here, check out our DT reports at dynamictraders.com. You want to learn a trading strategy, trading plan, entry to exit, check out my book, High Probability Trading Strategies. So we're going to take a look at a couple of markets here today, and even if they're not markets that you trade, is what you learn you can apply to the markets you trade and the time frames you trade, because this is as much about educating as it is a trade alert video. And you might take a look at the past couple of weeks' videos. Like last week we featured gold. We're not going to talk about gold this week because that setup has not been triggered yet. It's in basically the same position as it was a week ago, but I suspect by this Wednesday the specific setup is going to be made in gold. So just review the video from last week. And our other markets, S&P and Bitcoin, we did a follow-up on last week. Well, they're unfolding as anticipated. So check out past videos. You'll learn something, and you might be prepared for a good trade opportunity. Okay, let's take a look at a couple setups I think going to be coming up this week. The first market we're going to look at is notes, and everything we talk about notes applies to bonds as well. This is a weekly chart of notes, and a couple things that are important to take a look at here. Number one, the weekly momentums are dual look back bullish from the oversold zone, and this is week number 4. Usually by the 4th or 5th week we make a price reversal, so that's significant warning that we're in a position, actually near the extreme of the position, to make a weekly low in notes. That would be followed by a 3 to 4 week net bull trend, sideways up, as I usually say. The other thing to look at in the weekly data is following the sharp decline this past week and closed near the low, we've closed well below the closing lows of this, what I got labeled as a wave B. That confirms this is a completed ABC correction. That's really significant in that eventually the bear trend should continue to a new low. Now that's not too difficult to imagine. You don't even have to be a technical analyst to imagine that, is that rates have been so low for so long. Eventually they're going to start ratcheting up. Well, they've already started a little bit. So any advance should be a correction within a bear trend. But given, we always like to look at weekly reversals, because weekly trends, we usually have 2 to 3 and 4 weeks there of net trend when we make a weekly momentum dual look back bull reversal or bear reversal. And so those are the trade setups we'd like to focus on. Here's the notes December contract, and this is where it gets really interesting and why we're taking a look at notes this week, because this is potentially just a real high probability trade with very minimal capital exposure, because everything's coming together. So this is the closing data of the daily note. So coming off the August high, we had an impulsive decline. I got labeled a wave 1, and we were looking at this all through this period as a correction. And when it was complete, it should be a wave 2. And then we've been net bearish for the past 2, almost 3 weeks here. And look at how beautiful this is with the close-only data for a 1, 2, 3, 4, 5 wave decline. And what's special about this is, and again, this is the daily closes, is as of the end of last week, it was just a little bit above the 162% alternate price projection of this wave 1. In other words, we take the range of wave 1, multiply it by 162%, project it from the wave 2 high, and that's a real typical target for a wave 3. So we're almost right at that target as of the close last week. And then also as of the close last week, we're in the range of the 127, 162% external retracement of the wave 4, and that's the typical end of wave 5 target zone. I don't show the 162% external retracement because it overlapped with this price area where you couldn't even read the numbers. That's how close they are. So we're a beautiful pattern coming down. We're in a position to make an end of wave 5 of 3 and weekly low here within the next couple 3 days. And the daily momentum is bearish, but the fast line reached oversold. So then that indicates itself we should be within 2 to 3 days of completing a daily low. The next daily momentum bull reversal will be a dual look back momentum setup to complete a weekly low. And that'll be a great setup on the long side for notes or bonds for a probable 2 to 3 week or so net bull trend. So when we get setups like that, we really want to be aware of them because what we're looking for is technical conditions with a high probability outcome. And so when we have the pattern, we have the price, we have the time, we have two time frames, multiple time frame, meaning weekly and daily, all coming together at one time, those are the markets that you want to be alert to for a setup. So watch notes or bonds next week for a momentum bull reversal, some sort of reversal signal, because that reversal signal has a good probability of completing a weekly low and having a great trade on the long side. Of course, you can use ETFs. You don't have to just use futures contracts. You can use ETFs, a lot of other types of contracts you can use to take advantage of that information. Let's take a look at one other setup coming up, I think, within the next few days. So the next market we're going to take a look at is soybeans. Now I realize a lot of the listeners to this video don't trade soybeans. You got to ask yourself, why not? I realize a lot of people, especially new traders, they want to trade the financials, they want to trade cryptocurrency, they want to day trade, real short-term kind of trading. Of course, that's why the vast majority of people that have trading accounts consistently lose money. I used to tell people who were interested in trading, and they were contacting me, whether it's about our software or our reports, and they would say, I want to day trade, the S&P or something like that, and I say, why don't you get started with one of the agricultural markets? Relatively low margin, you can trade small positions and learn to trade on something that's not going to cost you a lot until you learn how to trade consistently profitable. Keep in mind, it's all just bars on a chart. It doesn't matter if it's soybeans or if it's bonds or if it's the S&P. It's all just bars on the chart, and you approach them all in the same way. So what I used to tell people is if you can't make money trading soybeans or corn or whatever, you're never going to make money trading the financial markets. I can guarantee you that. So if you can't make some money with beans, you'll never make money in the financial markets. So you might want to think about beans because once they make a reversal, a lot of times they have some real consistent and persistent trends. So anyway, that said, look, let me go back to the weekly data. I've given that lecture to you. And the weekly momentums have been dual look back oversold for several weeks. The key here is that more than likely, beans are making a corrective decline from a pretty high position, over $12. So more than likely, this is a correction. It's not the beginning of a bear trend. And beans are in a position whenever they make a weekly low at this point in time, it has the potential for not just being a weekly low and then sideways to up for 2 or 3 or 4 weeks, but has the potential for completing an ABC correction. That's why we might want to be alert to a potential weekly low in beans. So we're at the extremes of where the momentum cycle usually is before we make a low. Here's our daily data. The daily momentum, the fast line 8. The fast line of the 8 look back has reached overbought last week. More than likely, we're going to make a daily high and then another cycle or rotation in the daily momentums. We had a reversal here a few days ago on this big outside bull reversal day. And that was our setup to develop a go-long strategy. However, there was no follow-through, just went sideways for the next few days and never closed. This is what was going to be our trigger to enter long, a close above 1252, and it never made that. So that's called trade management, trade strategies. You identify a potential reversal, you identify the trigger that confirms that reversal, and then that's when you then have a specific get long trade strategies. So that didn't pan out. Daily momentum's reaching overbought. The next cycle and bull reversal in the daily momentums, given the weekly momentums are at the extreme, that'll be the setup to get on the long side. Really similar to where gold's at right now. The gold weekly momentums are oversold, and daily momentums are reaching overbought. They ought to be sideways to down a few days, just like soybeans. So the next daily momentum, a bull reversal, will be a dual time frame momentum setup to develop a specific go long strategy. And given we're this far into the weekly momentum cycle, it has a real good possibility of completing a weekly low and then being sideways up for 2 or 3 weeks. So as you know, we don't forecast here. We look for trade opportunities. So not necessarily are beans going to then continue to a new high, but they'll be in a position to potentially do that. So if we can position for the smaller time frame weekly trend, 2 to 3 weeks sideways to up, and in the event that it unfolds into a higher time frame bull trend to a new high, and that would be over several months, we'll be positioned for that. So that's why, just like in bonds, soybeans have a potential great setup probably before the end of next week. You ought to be alert to. And what you learn here, you can apply to any other market. In that, if we get near a higher time frame position to make a reversal, you go to the lower time frame to position on the specific trade strategy. Well, that's it for this week. Hopefully you have a fantastic week. Keep healthy. Have a little bit of fun this weekend. And well, yeah, I was going to say next week we'll be back. I probably won't have an update next week. I'm going to be on a vacation. Take a week off. So if I'm not back next week, I will in a couple weeks. So everybody, take care.